Hello, hello. Woo! Welcome to another episode of Forex Focus, where we talk all about mastering the art of trading with a strong mindset. And how's it going? Nick, can you hear me clearly?
Yes, I can.
Awesome. I just want to say hello to those of you who are tuning in with us live. And for those of you who are watching the replay, hello to you as well. Make sure you show us some love in the comments and let us know who you are and where you're tuning in from so we can shout you out and say, hey. All right, guys, as you can see, it is only me and Nick on today's episode today. Andy is not going to be with us, but that's okay. We're going to make sure that we move along without our good friend. And we're going to discuss today's topic. It is our 31st episode of Forex Focus, which is pretty wild to think that we've come that far. But it's pretty amazing, and we're excited about that. Hey, who is watching right now? Let us know in the comments so that we can say hey to you. So I have a question for you guys, and that is, I don't know, has anybody noticed what has been happening in the markets lately, right? It's the 10th of February. Trump has been in office now for a couple of weeks here in the United States. And there have been some changes in market volatility since that happened. So much so. Hey, Marinda, how nice of you to join us. Where are you joining today from? Please let us know where you are from in the comments so we could say hey. And I know Nick will definitely love to comment on this because he literally texted me last night when the market opened and said, Rhea, can you believe this gap? Didn't you say that, Nick?
Yeah. Another gap. Not even just this gap. Another gap. Yeah.
Not just not just yesterday's gap in the market, but there was a gap the week before also. I was in a trade on Euro USD and the market opened and I was down in drawdown double than what I should have, right? Because I had a stop loss in place, but it's like it didn't even matter that I had a stop loss there. It kind of reminded me of what it's like trading in the stock market. I don't know if you guys have ever traded in the stock market, but one of the downsides to trading in the stock market is if you leave your trade open overnight when the stock market closes, you're definitely going to get a gap when the market opens. And it doesn't matter if you had a stop loss or not. So it was kind of like one of those situations. And so the question becomes, what do you do when you start realizing that there are some fundamental influences impacting the market in a way that is changing the volatility of the market, right? That's kind of putting a wrench in your trading a little bit. Because if you guys don't know, hey, that's good to hear. I did trade this morning. Nick, did you trade today?
No, not at all. I was just watching.
Oh, I traded this morning. I traded in the futures market. I traded platinum. I broke even, and I'm happy with that. I traded beautifully, even though I broke even, so I'm happy. Um, so for those of you who don't know, Nick and I we're primarily swing traders, although I've been working on getting better as a day trader in the futures market every day. And so as swing traders, we have a certain way of doing things. So when we start seeing that now we're getting gaps when we weren't having that experience before, it kind of really messes us up with our trading. And so the question becomes, how do you adapt, right? So today's topic is all about, man, what do you do when there's a wrench thrown in the markets, right? When things switch up in volatility in a way that you're not used to as a trader, and how that might impact your results in your trading. How do we shift? How do we adapt? What do we do, if anything, What do we change, if anything, as traders, um, when those things happen? So we've got a few points, key points that I think we kind of want to go over, but I'm done talking. I've been talking enough. No, I'm just kidding. Hello to the trader who just joined our live right now. Where are you tuning in from? Make sure you say, let us know who you are and where you're from so we can say hello. So,
Oh, Marinda said she's from South Africa.
Miranda's
Victoria.
from yes, from South Africa. Nick is from Zambia.
Zambia. Yes,
Not
exactly.
Zimbabwe.
Yeah. So Marinda, I'm sure according to the surname, she's obviously Afrikaans. So hoe gaan dit met jou, Marinda?
um, so let's talk about why mental flexibility is one of the most critical skills for traders facing the market. Barry, what kind of thoughts do you have on that?
Okay. For me, wait. Ask your question again. I kind of got sidetracked.
Oh yeah, because you were talking to Miranda. Were you talking to her in Afrikaans?
Yes, in Afrikaners.
Yeah. Um, so the
Mm.
question that I have is, why would you say that mental flexibility is one of the most critical skills for traders to have when facing market volatility or just, I guess, unexpected changes in market volatility that we might not be used to due to like maybe fundamental changes?
Oh yeah. So yeah, it's important for a trader to be mentally flexible, most especially when there's like volatility. Let's take, for example, in 2020, there was a lot of crazy volatility during that time. Markets were going up and down within days. Like they would make moves that would usually take months within just days. So that was crazy. And if you had stop losses, your stop losses may have to have been wider, and your targets may also have to have been wider during that time. So you had to like balance. So during that time when there's high volatility, it's important for the trader to be flexible, know how to manage their risk overall, rather than sticking with the same thing over and over again. Like if they have a 10 pip stop loss, that 10 pip stop loss is not going to work in high volatility markets. You might end up losing 10 times in a row and think your system is the problem, when that's not even actually the case. The case is that volatility in the market has changed. So that would mean you need to widen your stop losses to accommodate the high volatility. And of course, that will definitely take a toll on your um your mental capacity. It will take a toll on it, because if you do see 10 losses in a row, and of course you're seeing crazy moves, you're going to be in a huge drawdown. That's a fact. Yeah, so you need to be ready for the drawdowns. The markets will not always work the way you want them to work. Even if you put 1% stop loss, there's so many things which are going to happen. There's going to either be slippage, that's one, especially if you trade news, and there's going to be gaps like we have been seeing, where you will be losing more than 1%. It's not like you're a bad trader, it's just because circumstances have changed and you need to protect yourselves during those circumstances. That's why I believe a lot of traders, everybody says you need to risk either 0.5% to 1% per trade. And imagine if you're risking 2, 3, 4, and then the market gaps, you might have maybe negative 15% from just a 3% stop loss. Yeah. So those are things you need to keep in mind and be ready for mentally.
Yeah, I feel like you covered so much, right? Because you even dived into, how traders adapt. And one of the things that you talked
Okay.
about is, you know, yeah, not just why it's important to adapt, but also how we can adapt, which is kind of, I don't know, analyzing our risk and assessing how we might be able to change our risk according to um, according to what's happening in the market, right? I
Yeah.
think another thing though to be mindful of, um, that I think is important is being able to not be emotionally attached to your trade or even so
Mhm.
much to your trading approach. Like one of the hardest things as traders is knowing when to walk away or to cut your losses in a trade. Um, you know, that can be very hard for some traders, right? Especially if you're new to trading, maybe you're in your first year or two. Um, a lot of traders have the tendency of having the habit of um being too emotionally attached to the trade that they executed and the expectation that they have for that trade to go the way they want it to go. And when the market does something completely different, when there's some type of unexpected news release, some type of change in the economy that impacts market volatility, sometimes we stay in trades longer than what we even should be. You know, we need to cut that loss. And sometimes we're so afraid of just losing that we don't want to cut a loss at all. But the question becomes what's worse, right? Cutting your loss earlier and losing less, or risking losing far more of your capital. So that's for me is a big one, is just emotional attachment to our trade or to our trading style. Maybe like for example, right, Nick was talking about how we might need to adapt or change our risk or lower our risk. Some traders may not like that because they're used to always risking the same thing. Uh, but there are going to be those times where, yeah, you may need to change that, in order to protect your overall capital. So those are some of my thoughts. I think about that. I don't know
Hmm.
what you think. If you
Yeah,
agree, if
that's
you don't agree.
yes, I do agree. Yes, yes.
Good.
So, I don't know if you have any more questions because we have some questions in the chat right now, maybe that you
Yeah,
would want
you
to
can address.
address.
You can address. Go ahead, darling.
Okay,
Um,
so there's this one from Ekosuka. There's a belief, and actually true in most cases, that if you just follow 1 to 2 pairs max, it will be profitable. And if that goes best for intraday traders, so how do you tackle as a swinger? Well, Ekosuka, what I can say is, yeah, it's perfectly fine if you wanna trade 1 to 2 trades or pairs rather, 1 to 2 pairs in your portfolio or watch list. That's totally up to you. And for a string trader, that can also still work even if they're not intraday traders, because especially if they are not in the same basket. Let's say you're trading probably gold, then also Nasdaq. Those are two different markets. If you're maybe trading pound dollar, then CAD yen, those are two different markets. So as long as there are two different markets, I believe it should work in your favor one way or another. But it's also, what can I say, recommended to have more pairs to trade with sometimes. It just depends on your style of trading and your risk tolerance. And if you're okay of a month of where you don't make any wins, or a year where you literally almost just break even because you're sticking to one or two instruments or pairs. That's what I can say. Yeah, if you're ready for that, if you're ready just to like break even, then you go for it. But if you're not, then maybe you can choose to increase your number of instruments in your portfolio. Yeah.
You know what's interesting about what Nick is saying about the instruments, and this is something that probably took me 8 years to really realize as a trader, is the simple fact that there are going to be seasons in the markets where certain pairs or instruments or tickers that you're used to trading are not going to yield you the same results as maybe they may have in the past, right? Um, I have had, for example, let me give you an example. Um, there have been times in the year where I do really, really well with the Japanese yen pairs. And I'm not doing really well with the Japanese yen pairs, you know? And I'm thinking, oh yeah, I'm gonna trade all the Japanese yen. And then for some reason, there are changes, in volatility, maybe with those currencies or whatnot, that is impacting my profitability, um and so I think that there is wisdom, right, and not having a huge watch list, but at the same time having a watch list that's big enough where um in those times where it makes sense for you to trade something different than what you are usually always trading, you can do that. You can kind of be flexible, um, in moving to a different instrument to trade, because maybe right now your main instrument that you're so used to trading, man, maybe there's just some changes that are happening in the markets with that particular instrument where it's just not the best time to be trading that instrument, if that makes sense. Nick, does that make sense?
Yes, it sure does. Yeah, of
You
course.
know, this
And I
I
see
oh, go ahead.
yeah, yeah, and I see Mirinda is saying that as a swing trader it might limit your trades as you need to wait for setups. As intraday or day scalping is better. Focus on one pair, only my opinion. Even as a swing trader, you can focus on one pair. It again doesn't matter how long it takes, as long as you have that opportunity. Because at times can even take a month, 2 months, you have nothing. But when that opportunity does come, you might even have that huge winner, which would have been
Mhm.
worth it. So that's yeah, it's there's no right and wrong in trading. That's what I can say. It all comes down to, are you willing to adapt? Are you disciplined? Is your risk management sound? And everything in between. Yeah. So the next questions, any other questions we can tackle, Rhea?
How can traders train themselves to stay adaptable in rapidly market changes? We've actually covered a few already, right? We talked about adapting our risk management. Um, uh, you know, being flexible with the pairs that we trade, right? The instruments that we trade. I've also realized that some strategies might work differently also in different type of market volatility. Um, so we might, I usually I'm not against having multiple trading strategies, and having multiple trading strategies doesn't necessarily mean that it needs to be completely different. Like having a different trading strategy can be something as simple as, you know, maybe in one strategy, your risk to reward is one way, and then in the other, your risk to reward is another way, or maybe in one strategy, you use one time frame and in a certain type of entry, you know, I don't know, tactic. And then the other one, it could be something as simple as just making such a small change, right? But um having those changes though in how we approach the market, right? Even in our our trading process, um, being able to adapt that to what we're seeing in the market too, I think is is good to have. So yeah,
Mm-hmm.
risk management, being flexible with what we trade, uh, being able to identify what times are best for trading what, and when we might need to take a break from trading certain instruments, and even when we might need to just take a totally different approach to how we trade, simply because the volatility is so different than what we're used to. um
Yeah, that's true.
marinda Marinda has something to say. Absolutely. I used to be all over all the pairs, only recently started focusing only on gold, to each his own, but only trading gold helps my trading psychology. Marinda, I agree, honey. I actually just I just switched over to metals altogether personally. So I only trade really gold and platinum. In platinum, you can't trade in Forex. Well, I don't know if there is a brokerage out there that allows you to trade platinum in Forex or CFDs, but I trade platinum in futures and gold in the Forex market. Well, actually, I trade gold and futures too. So, but I'm debating if I want to trade silver. But yeah, I found that switching to metals for me right now is the best fit for me. And just focusing on that and not trying to be all over the place with all these different pairs, because I did have a big watch list of maybe about 6 or 7 pairs, and then I just got tired of it, and I was just like, and I was only making money with gold out of everything. So I said, I'm just going to follow the money. I'm just going to follow the money, and I'm just going to stick to MGC. I'm just going to stick to gold. So I completely understand. I'm with you on that.
Mm-hmm.
Somebody has something for you, Nick.
Okay. I'm not sure if he thinks I'm the owner of OFB, but I'm not.
And honestly, the opportunity Nick is providing to traders out there in a reasonable price and prop firm trading is really appreciable. Appreciate you appreciate it.
Mm-hmm.
Um, yeah, we agree. We agree. Definitely, Miranda. Yes, I'm so glad that we are in alignment on that. Okay, so let's see, what's our next point that we kind of want to touch on? So what are some common psychological barriers that prevent traders from adapting? And how might we be able to overcome those barriers? Mm. Nick, Nick, what's the first thought that comes to your mind?
When I think of psychological barriers, I think always wanting to make a profit every month, I think, or every week, or every day, actually. Yeah. I'm talking more long term when I say every month, but the people literally want to make a profit every day. Where sometimes they even say, oh, I need to make even just 0.25% just so that I feel good for the day. But they actually even have probably a goal of maybe 0.5% or 1%. So it's important to know the market will give you what it has to give you. Sometimes it will give you a loss, sometimes it give you a major profit. And it's not wrong to have goals. It's not wrong to have goals. But I think long term goals in trading are much more sustainable than short term, because you cannot know where the market is going within a few hours, seconds, or yeah, just a day. Yeah, you do not know, because until like maybe one, two, three more candles or days show up, like, okay, we're in a trend, then from there you can make your decision whether you want to go long or short. Then, yeah, you need to just be flexible. Don't hold yourself completely to one thing, like, oh, if I don't make 10% this month, then I'm not a good trader at all. The month cannot always go as according to how you want it, unless you're the one who actually pumps and dumps the market. But no, yeah, I think that's one of the barriers that prevents traders from adapting. I think, yeah.
I was just going to say, I don't know if you guys noticed, right? But when we first got on and we first started our live, one of the first things I said was, I traded beautifully today. I broke even, but I traded beautifully and I'm so happy. Did any of you guys catch that? You know? And the thing is, right? Being successful in our trading doesn't necessarily have anything to do with whether or not you profited for that day. Something as simple as sticking to your trading plan, not over leveraging, over risking, you know, and being at peace with accepting a loss, you know, and being at peace with accepting a break even. That's success, y'all. Like, right, exactly. I did everything according to my trading plan. So even though like I lost, I took a trade on platinum today and I thought it was breaking out of a range. It turns out it wasn't. It continued
Mhm.
in the range. And so I lost some money. But then, I was able to make that money back that I lost and walk away with a break even for the day. And I just love that. I love that I did not trade emotionally, you know? And so that's success. Like, don't let anybody tell you that success is only based upon how much money you're making. Success is also based upon how effortlessly you can execute your trading plan for the day and be okay and be at peace with whatever the result was, whether you made money or not. Making money is just the icing on the cake. It's like the maraschino cherry. I like maraschino cherries, by the way. They're good. Um, on a hot
Yeah.
fudge sundae, Uh, so I wanted to say that. And another thing that I wanted to say too, because Nick was talking about long-term success, right? I was watching a podcast, or maybe not a podcast, but like a live with the trader that I follow. And one of the things she said was people were giving her a hard time because she was in the red for 3 months straight. Like she was on a 3-month losing streak. And even Nick has had this issue where traders like would look at his stats and see that he was on a losing streak. And then you guys would have something to say about that. But let me tell you something. When you have a long term bird's eye view on the market as a whole, there's 12 months in a year, guys. If you have 3 losing months, right, but 9 winning months, are you still profitable for the year? That's the question. You know, um, we have to understand that trading is like a business, right? And so we have to kind of have like a CEO mindset with our trading and understand that even when we're running a business, there are going to be months in our business where our profitability as a business is not going to be that great, you know? It just that's just we're gonna have months where the numbers are gonna be amazing, and we're gonna have months when the numbers are not gonna be that great. But we have to look at the big picture. Like, okay, I had a few months that were not that great, but what about the rest of the year? What about the rest? You know? And that's kind of how we have to look at it. Um, there's never gonna be a time, no matter how profitable you are as a trader. And by the way, I just want to say this. If you are someone who is waiting for the day where you're going to be profitable and you're never going to lose, I want you to know that day is never going to come. Now, you're going to be profitable, yes, but I want you to understand again, trading is like a business. And no matter how profitable you do eventually become, you're still going to have seasons as a trader where you're going to be down, and that's okay. We all go through it, but business picks up eventually as usual, right, Nick?
Yes, that's definitely true. Yeah. Never
Right,
lose
Nick?
hope.
Nick knows because he's gone months on losing streaks, right?
Hmm. And then some days will just be so amazing, and you'll be like, "Oh yeah,
Oh
mm-hmm,
yeah, this is, you know,
finally."
I mean, come on, Mel. November, December, and January were like, ugh, for me, it was horrible. I was like, and it wasn't just me that was feeling it. It was a lot of traders that were feeling it. There were so many things happening economically on a fundamental, you know, fundamentally, um, the US getting a new president. I mean, so many things changing that impacts a lot. So, guys, don't be so hard on yourself. Just take the punches on the chin and show up the next day and do it again.
Mm-hmm.
Hey, what's up, Andres? Andres Martinez, where are you from? Hola, ¿cómo estás? ¿De dónde eres? Where are you from? Whew. All right, guys. So I think we'll do one more for the sake of time. Let's not get into those kind of political talks. Hola from Ecuador. Hello, Andres. Welcome. I think for the sake of time, we will answer one more question. We'll cover one more point. Let's see. Nick, do you want to talk some techniques or exercises? Or do you want to talk? Ooh, what about back testing?
Yeah, and scenario play. Yes. So yeah,
What
if
let this I love this question, right? I love this point, and I know Nick is gonna agree. What role does backtesting and scenario analysis play in helping traders build mental resilience? Mm. Oh, this is good. Nick, I'll let you
yeah,
go first.
so basically, of course, when you do back tests, you're gonna see the different outcomes that the market played, like through your testing period. So if there are gaps in the market, for example, you can use that as a scenario. You can choose, like in your analysis, you can choose, okay, can I um close every single day and see what happens, or can I close every end of the week my swing trade and reopen it on a Monday, or can I leave it open and will it have an impact on my P&L overall? Let's say you do that for a 6 month period, and you will see the difference. Some days you'll find that it gaps in your direction, some days you find it gaps against your direction, which you chose. So there's a good and bad side. But then you can streamline it and try and find what works for you. Is holding the best idea, or is cutting your losses or preventing yourself from trading through certain periods of the week or day the best thing you can do? You can just mix and match it all throughout. Yeah,
I would say
that's my.
the
Mhm.
thing that I love and that I appreciate so much about back testing, and I just want to share this. Because for the longest time I hated back testing, but that was just because I was being lazy. Okay. So I'm just being honest. That's such a relatable experience. Oh my gosh. Traders resist backtesting it. I wasn't talking to you, AI. See, guys, this is the problem with artificial intelligence, man. It be thinking we having conversations with it when we're not. Somebody tell Siri she needs to be quiet. She over here trying to chime into our podcast live, y'all. Okay, anyway.
Do not be saying the word Siri all the time, because on my side it's gonna trigger.
I swear she be thinking we talking to her. Like, man, AI is like really picking up and developing a life of its own right now.
Hmm.
Oh my goodness, that was hilarious. Um, so I was just gonna say that that's relatable. I'm sorry. Oh man. I really grew to love back testing when I realized when I when I realized when I realized that I was able to see um I was able to see how likely my I was going to see wins as opposed to losses. And that is a beautiful thing to kind of train your eyes to see because it kind of like it trains your brain to understand that losses within your strategy are inevitable and that's okay, but there's always going to be more wins, overall in the long term. There's always going to be more wins than there are losses. And so that helps me to keep showing up and doing the same thing every day without feeling the need to really change a whole lot because I already know that a loss is inevitable because I've back tested and I've back tested. And so I just know what I know. I've seen it enough times through my back testing to be confident in it. So
Mhm.
that is one of the things, and that like I said, having that confidence, I guess overall in like the long-term outcome, you know, um, I think really does aid and really helps your psychology. Uh, so yeah, if you're not back testing, don't be like the old version of me that was, being lazy. Don't be lazy. Don't be a fool. I pity the fool that doesn't back test. I
Yeah.
pity the fool that is a back test. Yeah. So those are my thoughts on that. I don't know. Nick, do you have any further thoughts before we bid them farewell today? Any
No,
thoughts?
nothing on my end yet.
Nothing. Yeah, definitely relatable. Oh man. Well, guys, this is a really I thought this was a really timely topic for us to kind of talk about because there have been a lot of funky changes in market volatility lately that I had to stop holding my trades over the weekend because the gaps the last couple of weeks every Sunday night were just killing me. So that's crazy, right? So I just felt like this topic was so timely in light of what's been going on lately, whew, politically in the world. So thanks for coming to hang out with us and engage with us and talk to us and share your thoughts about you know how we navigate this world of trading when the market decides to switch up on us sometimes, and that's definitely going to happen. If you guys got any value, uh hi Nahar. If you're on Discord, I will see. And I'll do my best to direct you. In terms of accounts, I don't have any power over accounts because I don't work within the support department. So that's not something that I can help you with as much as the support team can. So, whatever important thing that you might need help with regarding your account, definitely make sure you reach out to support directly because, they have access to things that I don't. I just want to let you know, but I will take a look at your message. Um, but if you guys got value out of today's live, make sure you give us a big thumbs up. Show us some love. And if you're not already subscribed to our YouTube channel, make sure that you do subscribe and that you hit the notification bell so that when we go live, you can be notified. Oh, that rhymed. When we go live,
Yeah.
you can be notified. Look at me. I'm the next Kendrick Lamar, y'all.
Oh my word. Mhm.
Hey, Nick already knows. Yeah. All right. All right, guys. Man, we appreciate you so much. And yeah, Marinda, thank you for coming and hanging out with us. We love when you guys come and hang out with us because let me tell you something. There's nothing worse than going live on YouTube and it's an audience of crickets.
Mhm.
So, we love you guys when you show up and you come hang out with us. So everybody have a great rest of your day, a great rest of your evening. We will be back next week. Stay tuned for next week's topic, and we'll come and we'll hang out and we'll have another little chit chat. All right, guys, take care, and we'll see you next time.
All right.
Oh, and one
Bye-bye.
more thing. Barry, are you leaving me?
No, I'm here.
Okay. One more thing, because Andy is not here.
Yeah.
Usually Andy would usually say, stay sharp and remember that with Forex Focus, success is just one trade away. All right, guys.
Indeed.
Now we can go. See you guys next week.
All right. Bye-bye.